Let's address the fundamental side of the story. There is enough and more to be said and spoken about the IT, about the FMCG basket overall, about the banking sector. And to take the discussion forward, we've been joined by Mayuresh Joshi, the head research of William O'Neill Company. Good morning there, Mayuresh.
Morning, Nikki. Pleasure to be on your show.
Well, pleasure is all mine, but I'm going to start off by asking you, what are you picking up in the markets right now? HDFC is going to be reporting in numbers today. You have Chola Mandalam Investment, which has reported a solid set of numbers, and there is a double upgrade coming in from JP Morgan on account of that. Two different sectors altogether. One is NBFC, and of course, we are also talking about HDFC. What do you make out of it, and what's your assessment overall?
So to a large extent, I think the delivery of numbers by Chola has been extremely strong. So I think the note that they put out before the earnings release and what they have delivered, I think it's still a stronger set, whether it's the AUM growth, the advances growth that you're probably looking at, the collection efficiencies, and the moderation that you probably witnessed in the asset quality pressures as well. So if you summarize all these elements and put them together, I think the kind of performance that has got exhibited has been very, very resilient. The kind of sources that they've got for borrowings, including bank borrowings, I think we've hit the peak rates in terms of rate increases. And to that extent, I think the borrowing mix for quality NBFCs like Chola do hold out. So anybody holding out Chola Mandalam Investment and Finance, I think, should continue holding that. For HDFC, expectations of a very stable set of numbers, Nikki, as always. Asset quality expected to be very, very stable. The spreads are expected to be stable as always. And therefore, I think the kind of valuation premium that they derive probably is exhibited in the price as well. Obviously, I think the merger synergies with the bank is expected to start getting operationalized in the next few quarters. And therefore, I think it's one quality portfolio stock that one should just hold and keep it for keeps. Even after the merger, my own sense is that it's a quality behemoth at the end of the day, a leadership stock that we at O'Neill always like. I think it's a buy and it's kind of a bold stock where it's probably just keep it and forget about it.
Sure. Mayuresh, your word coming in on the IT sector. Cognizant has decided to lay off 3,500 employees, give up some of the space. The margins are the lowest in the IT industry. It really underscores the underlying pain of the IT sector, especially in the US, and the exposure thereof. What do you make out of the space? Do you think most of the negatives are now factored in? A bunch of the companies have already reported that the numbers, and we've decoded that numbers enough and more in details. But at this point of time, do you think they're attractive options and the valuations look attractive to you?
I think most of the stocks have broken out quite significantly, both in terms of price action and even in terms of the valuation stack up. A lot of the mid-cap IT names which have performed exceedingly well, Nikki, I think stocks like a Persistent, Mastech, KPI Tech, LT High, Mindtree, I think all of these companies gave stellar set of numbers. And therefore, I think both from a price and a valuation stack-up perspective, a little bit on the higher side in terms of standard deviation, mean and averages over the past 5 to 10 years. And therefore, some element of cooling off is required in terms of fresh entries, specifically in this space. Large cap IT has got battered. I think specifically after the Infosys number, what you've probably seen even for TCS with a very, very high base, TechM's commentary was very, very soft, and so was commentary. So I think mid-cap has clearly outperformed, but for these specific reasons, one should wait for significant pullbacks to start having fresh entries on discounters. The second element, obviously, for the sector as a whole, with the entire regional bank mess in the US, and where the BFSI contributes anywhere between 30 and 50% in terms of revenue contribution for most IT companies. If that goes into some element of an apparent slowdown, and a significant one at that, order slowdowns will be very, very apparent from the second quarter of this financial year. In fact, in the first quarter will be very, very important for these companies as a whole. And therefore, I think how the results play out, how the macro conditions play out, specifically in the US, you're still looking at rate increases in the European zone, because the core inflation still remains extremely sticky out there, is going to probably a drag on the order flows. And therefore, I think margins, even if they have been sustaining because of attrition issues largely behind the sector as a whole, I think fresh order wins will probably weigh in terms of the sector as well. So I think my mantra is, I think, wait for pullbacks within the mid-cap IT space it's got a little bit too heated at this point of time. And there are some concerns as far as the banking sector is concerned, specifically the regional banks in the US and inflationary macro concerns in the Eurozone.
I completely agree and take this on board. There have been a couple of sure, attrition would be behind us. That's also hinting at the potential slowdown that has come in overall in terms of the sector, So that's not really a solace point out there. Even if you talk about the entire fear is just intact within the space, and mid-cap space right now, as I don't know, we've been speaking this enough and more, remains to be more vulnerable. But, in today's session, SBI Life, HDFC Life, these are some of the top gainers that we have overall. The earnings have been out for one of this, if I remember. But what do you make out of the space right now? And do these counters look attractive at the given valuation?
So again, classical setup for life insurance players, Nikki. If you look at SBI Life, Max, ICICI and HDFC Life, I think the quarter gone by, I think with the new tax regulations and rules creeping in for this financial year starting April 1, and with a lot of tax incentive schemes that a lot of investors probably look at the end of the previous financial year, you'd seen significant amount of inflows happening into the sector. Now, with the changes that have happened and the tweaks that have probably happened, both in terms of the product taxability and the overall taxability exceeding 5 lakhs, clearly, I think companies like HDFC, ICICI, which have gone on record saying that they will take a hit in terms of top line and bottom line as well, anywhere between 10 to 15% will obviously have a say in terms of the earnings growth. The second element in terms of the new tax regime that probably kicks in, and when a lot of people probably opt out for that, there is no apparent need for having forced or compulsive savings through life insurance products. So I think what happens in terms of the new business premium growth for this particular segment, which is pretty large, by the way, is going to be extremely critical to observe and see and monitor as well. The third element in terms of a lot of these operational costs, specifically for HDFC Life, ICICI too, including commissions and expense ratios, still are quite significant. So if I stack up all these elements in terms of the product mix, how much of percentage is in protection, non-participating products, in terms of the overall compensation, including the commission and expense ratios, and the bank assurance and the distribution tie-up, probably SBI Life stays on top of the stack at this point.
So SBI Life stays on top of the stack for Mayuresh at this point of time. But Mayuresh, one quick question that we have overall, something like a Reliance Industry also, your view coming in on that one. There's a demerger which is coming through, and the Jio Financial Services is expected to be listed by September. Thus far, we haven't really seen significant participation coming in from Reliance. But overall, the earnings have been really steady set of numbers. What do you make out of it?
Oh, absolutely. In fact, the oil and gas segment outperformed this time round as well. Retail has seen significant strides, both in terms of the retail space that they are probably adding on, and expectations in terms of the margin performance as well. My own expectations in terms of the telecom part of the business, Jio should have some elements of rate increases along with Airtel in the coming few months. Might be expensive for our pockets, but it's still comparatively cheaper than anywhere in the globe at this point of time. So with ARPU increases, I think the kind of stability that one really expects for this part of the business, including the 5G capex rollout spends that are probably happening, is very encouraging. And the best part of the press release, Nikki, was even with all the investments that are probably going into green hydrogen and the new projects thereof, the management still believes that net debt to EBITDA should not exceed 1 or 1.25 times, which allays a lot of concerns in terms of the virgin debt on their books. So yeah, I think it's been a steady show. Singapore GRMs, as we speak, have corrected over the past couple of weeks. So to that extent, how this is a key monitorable for the oil and gas and the petchem space needs to be seen. But Reliance obviously has multiple feedstock options at its BS, which probably allays a lot of concerns in terms of how a lot of companies get hit on their core margins. Reliance probably stands a little bit better off. But this remains the only key risk on the oil and gas petchem space on how the GRM should probably play out. But overall, I think it's a solid play, both in terms of retail and oil and gas expected.
All right, Mayuresh, there is always a price we pay when it comes to the premium. When it comes to the steady state of business out there, and probably Reliance is no different, but disclosures out there, will be owned by the company as such. But yes, we would also like to talk about the Fed rate hikes which have come through. that takes a major chunk of uncertainty behind now. Markets can probably freely move with what has happened, and probably what disappointed is really that there was this downplaying of the entire rate cut, and there's a little uncertainty if they're going to go ahead again with the trajectory. What do you make out of it? And with the stance, which are the sectors now you think can do better?
So to a large extent, as far as the Fed statements are concerned, I mean, I was not surprised. I think inflation has to come down before rate cuts start happening. Otherwise, you're in that burgeoning cycle of that classical cyclical cycle of demand supply. So to a large extent, I think markets will gestate that. But you're absolutely right. A large part of the rate hikes behind us. In our domestic context as well, I think the rate hikes are largely now behind us. Now, as inflation starts cooling off, and we come near that 4% trajectory even in our own context as far as the Indian CPI basket is concerned, rate cuts will start coming through. The only headwind that the markets will now probably look at is how long will these rates persist? Higher for longer will probably mean an overhang for the market itself, but they do take that in their stride as well. And to a large extent, I think the inflation trajectory will start coming off quite significantly, and therefore growth will be given impetus over the next few months and next few quarters. Having said that, with our own government infrastructure spending, the general elections around the corner in the next 3 to 4 quarters, infrastructure, capital goods still remain in a very, very sweet spot. BFSI selectively, with the kind of run that we've probably seen right now, still remains in a sweet spot at this juncture. And a few of the broader market areas like utilities, power utilities to be more specific, a few PSU entities, and a few of the indirect infra players, including cement, including pipe companies as well, probably look very, very attractive. So I think this is what is probably coming out on our sectoral graph as far as the ONIL lens is.
All right, Mayuresh, we'll leave it at that. Thank you so much for taking out the time. But a bit of market check out there for our viewers. Nifty is trading in green right now with gains of around 0.1%. 18,100 mark has been taken up. So that's the development coming in. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching.